please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So, like we told you, the government is all set to introduce new rules for load capacity of trucks and tractor trailers from tomorrow. We're learning from sources that the government will hike the load carrying capacity by up to 25% for these vehicles. The government is citing improvement in road quality as one of the reasons for that move. Parikshit Luthra joins us with more details from that exclusive story. Parikshit, can you take us through what the government plans to do and what are the other reasons being offered for that move?
The government is all set to hike load carrying capacities of different trucks in the country. This is coming after a span of 35 years. Last time these rules were modified was in 1983. As per the new norms that are set to kick in from Tuesday, if you have a truck with 2 axles, the present gross vehicle weight or the total vehicle weight including the load carrying capacity has to be 16.2 tons. This under the new norms and new rules would go up to 19 tons, which would mean that the percentage increase in load carrying capacity would go up by about 25.4%. Similarly, if you have a truck with 3 axles, the present gross vehicle weight is about 25 tons and it would go up to about 28.5 tons and the percentage increase in load carrying capacity would be about 20.6%. Transporters are welcoming this move, saying that this would improve compliance. It would be a welcome move for all logistical carriers as well as infrastructure companies. But at the same time, there are concerns. There are some mixed reactions coming from the industry as well, because they're saying that the quality of roads also has to improve, because if you have enhanced load carrying capacity but the roads are not compatible, then the number of accidents could really go up. The penalties will also be higher. Our sources in the government tell us that now if anyone violates these new norms, the fine could be 10 times the present fine, including the fine in the Motor Vehicles Act.
Right, many thanks, Parikshit, for bringing us all the details from that story. Let's also get an industry reaction on that story. We have Ashok Leyland's MD and CEO, Vinod Dasari, and Lata Venkatesh also joining us to take us through that conversation. Lata, over to you.
Thanks a lot for that, Arib. And I just want to add, Mr. Dasari, thank you very much for joining me. But there are a few more points that we got that the new truck loading rules are going to apply prospectively, and older vehicles will have to get an approval from the government to be able to avail of this extra load carrying permission. First up, how does this affect the industry? How does it affect your company?
Well, you know, it is rather confusing at this point, because somebody who has bought a vehicle, let's say, for 25 ton, that vehicle has been designed for a GVW of 25 ton. The braking has been designed for 25 tons, and everything has been on the vehicle chassis has been designed for 25 tons. I know that suddenly if they put in something where people can carry extra load, and while they are saying that they will now be extra stringent on the penalties, I don't know to what extent that is possible. If they can be extra stringent on penalties, why are they not extra stringent on penalties today? Well, if somebody is breaking the law, they should be stringent on it. So I'm worried about safety norms being violated. If the argument that the government has that they are overloading that much anyway today, well, if they are overloading that much anyway today, then there should be no impact on vehicle volumes, because tomorrow they will say, okay, now you carry 28 tons and that would be all that you're allowed to carry, and it will be very strictly imposed. So if that's the case and they are able to very strictly impose, then there should be no impact on volumes, because their whole argument is that this is only being done because that vehicles are overloaded anyway. Now, I find it a bit surprising on 2 reasons, Lata. One, somebody who's bought a vehicle today and somebody is going to buy a vehicle, let's say, after Tuesday, what does somebody who bought a vehicle do? I mean, he has a vehicle for 25 tons. He cannot suddenly get it registered for 28 tons because the brakes and everything have been designed for 25 tons.
Yeah, actually, that is going to be, yes. You know, the
secondly, I wanted to add, Lata, that even in US, a 1-axle truck or 2-axle trucks have got the difference between India and US is 16 to 18 tons. Here we are going to 19 tons, which is the world's highest.
Okay.
Similarly, on 3-axle trucks, we are going from 25 to 28. Once again, US is only at 26, which is the highest in the world. So we are going much higher than the world. And I am not sure our roads can take something like that. So if overloading, if you argue that overloading is anyway happening, well, put the stringent norms today.
Absolutely. No, actually, why I was trying to interrupt you is that this came with a further statement, or rather, I mean, again, this is source-based information, that older vehicles will have to get an approval from the government. I mean, this is a little surprising. First of all, which government? When you say government, do you mean it is an RTO? Is it a state government? Is it central government? And what permission will you get? I am 25, let me load till 28. Is that the kind of permission you should be asking?
Yeah, but that is probably what is being hinted, but I'm surprised because if that was the case, why weren't they doing it anyway? Because they're saying that you should not overload because it's not safe, it's not good for the roads and so on. And suddenly I will now give you a higher axle load to carry. I mean, I see a benefit for this when you can't get into the era of electric vehicles and so on. So if at all the government wants to do something like this, I would say do it from 2020 or something, and more EVs will be there and there is a higher propensity because the battery packs are heavy and so on, and that's when you need higher axle loads.
Yep.
But doing it right now in the middle of all of this, when everybody's struggling to get to BS6 and struggling with electric vehicles, it seems wrong. But between you and me, Lata, if the argument is anyway they are overloading,
yes,
now we will make sure that they don't overload, but they will only get to 28 and nothing higher. Well, that should have no impact on the volume then.
Okay, but you know, separately we were told that the new rules apply prospectively, and for the old ones you have to take a permission vehicle by vehicle. Now, if you only say that the new rules apply prospectively, how does that change the game for companies like yours? Will you all have to modify vehicles?
Yeah, the other thing that, Lata, nobody is talking about is that typically a 6-ton front axle takes a 295 tubeless radial. Now, if you go to a 7.5 ton, it requires a 305 radial, which is not available in India in very high volume.
Okay.
So to develop that might take a year.
Okay.
So suddenly, there's no tire capacity in India to do something like this. So that's another thing that we are all puzzled by as to what is the requirement, what is the urgency for this. I'm not so sure I understand.
Did you try to reach out to the government, or did SIAM try to reach out to the government?
SIAM suggested that if you want to do this, please do it from a prescribed date, which is at least a year or two away, along with BS6 norms, because we are anyway all testing our products for BS6. So we will test it with higher axle loads. We will design the chassis accordingly.
Okay.
So,
but no question of allowing existing vehicles on the road to, legalize what they should not be doing.
Well, I'm surprised how they will do that. I mean, on one hand, you could argue that, let's say somebody had designed the vehicle for zero overloading.
Yeah.
How will that vehicle stop? How will the engine carry that much more horsepower? That will mean much more fuel consumption, much higher emissions. If the argument is that the vehicles were anyway carrying more capacity, which our vehicles are designed to carry more load, if that is the argument that your vehicles were anyway being overloaded, so why are you worried about it? Well, then I should have no impact on volume, right?
Okay. Generally, who will give the permission if that's what they're saying? That, companies fleet operators can take extra capacity, but after seeking approval. Normally, who is the approving authority?
It will have to be an ARAI or a RTO that has to be approving this.
Okay. That doesn't sound like a corruption-free method. But Mr. Dasari, how do you expect demand to pan out, assuming this is the rule, that, prospectively...
Like I said,
yes.
In my mind, Lata, if the argument is they are anyway overloading 20-25%, but we will become very stringent and slap them with 10 times the fine, and hence we are going ahead with this 20-25% increase in allowable weight, then it should not impact us anyway, right?
Okay.
Because they were anyway overloading that much.
Okay. But if you do, try to change your current vehicles, which are already, which are going to be produced, will that mean, first of all, will you tweak? And if you do, will that mean higher cost?
Of course. If you have to use bigger tires, you have to use bigger axles, you have to use bigger steel frame sections. Everything has to be designed. I mean, can you guarantee that they will not overload beyond 28?
No, we cannot guarantee that at all. But obviously,
can,
the
right?
deterrent
So we'll
will be a fine.
We always design our vehicles to be at least 25-30% overload.
Okay.
Right, because some customer will do it and we don't want to break down.
Okay.
So we'll have to, everybody would have to operate their vehicles and the costs will go up, and the costs go up, obviously it will be passed on.
Okay. But what are you expecting, say, from tomorrow itself? Your dealers, will they find more demand, less demand, or will it be unchanged because, the rules don't really change much for prospective vehicles?
First, I think this will cause confusion, unnecessary confusion. I think people will say, shall I wait? Shall I do something? But I think in a week or so, it will all settle down and people will say, wait a minute, I was anyway doing it. Now I will be legally doing it. So let me continue to buy more vehicles. Before
or will they say that I'm anyway overloading and I'm allowed to legally now, so let me postpone the next vehicle? Because that's why truck maker stocks fell today.
If I'm legally, let's say it's effective from Wednesday. So if I'm a fleet owner, I'll say, well, I was anyway overloading. Now I'm legally allowed to do it. So it doesn't affect my decision.
Okay. But chances
now I can legally do it and I don't have to be worried about somebody slapping me. There's a fine, no RTO can stop me and so on.
Okay. So you basically won't expect any demand change at your end at this point?
No, I don't expect it.
Okay. And you will start tweaking your vehicles or changing them anytime soon, or you'll wait for more clarity?
At this point, we don't require to, because our vehicles are anyway designed to carry about 25-30% overload.
Okay.
But if this trend happens and it continues, only when new tires are available, Lata, please note that I'm saying that the tires are not available. Only when they are available, we will upgrade.
All right. Point taken, Mr. Dasari. Thank you very much for joining us and giving whatever clarity you can on this topic, which at the moment is a little confusing. As Mr. Dasari says, chances are nothing should change because people who are overloading will now do it with the satisfaction that, okay, we will not be caught because the law allows it and the demand cycle, therefore, should not change. Back to you, Ari.
After months of uncertainty and speculation, Fortis Healthcare is finally on the cusp of a deal. Last week, the Fortis Healthcare Board had approved a binding proposal from Malaysia-based IHH Healthcare, which will invest 4,000 crore rupees via preferential shares, and that will be followed by an open offer for shareholders as well. Now, it had outbid TPG Manipal in that race. Nisha Podar and Ekta Batra, who have been tracking all the developments from that story very closely from day one, join us now with a very special guest. Nisha, Ekta, over to you guys.
We have with us Dr. Tansy Lang of IHH on this mega transaction announcement of buying out Fortis. Doctor, so good to have you on CNBC TV18. First, congratulations. And I want to understand, what were the valuation drivers for buying out Fortis? And you had spoken to Fortis last year, same time as well, when the deal broke and you broke your exclusivity period as well with the company. What changed over time that you're now upbeat on acquiring the same company?
We have always been looking for accretive opportunities in India, because India is our fourth home growth market. So if you look at where we ended last year, there were a couple of issues we could not sort of get a grip on. I think one of the key things was really on the Daiichi sanctions on the shares. I think there was some sort of stay in terms of the execution of the sale of the shares itself. So because of that, at that particular point in time, we decided that we couldn't go ahead with the acquisition itself.
What drove the valuations to 170 rupees per share, and how much did it come down by because of the findings of the investigation report by Luthra and Luthra?
I think there were multiple data points. There was not one particular sort of set in terms of the data points. In terms of the multiple data points that we have, we actually triangulated. I think in terms of the performance from about a year ago, plus the due diligence findings, to the final audited financial statements in terms of the qualifications, I think the investigation that went into as a result of what was audited by the board, and also the fact that There were a couple of I think some of the qualifications, of course, we looked at. I think all of these factors, and also broader industry specifics in terms of the performance, led us to arrive at this particular valuation.
We do have a SEBI probe which is pending. We do have a forensic audit as well as maybe an SFIO probe where the details of that particular investigation is not known to the market or not known to anybody right now. Is there any condition that you have that if you don't like what you see, you can walk away?
No, we are committed to the deal. I think, of course, at this particular point in time, we are still subject to, our process is still subject to us going to the shareholders for their approval. And of course, the CCI, the Competition Commission of India, would also have to clear that. So these are the two main hurdles that is left. Okay. And yeah, it could be that when we sort of put up, I think the shareholders' approval is going to happen sometime in mid-August. So we're waiting for that. But okay. Otherwise, pretty much, if the CCI's approval is obtained, together with the support and approval, I think it was 75% of the voting shareholders present at the meeting itself, I think we're pretty much go ahead. There
is a possibility that there could be more medical devices which could come under health control or price control. Plus, there are a lot of issues and cases coming up with regards to overcharging. The Delhi government is coming up with possible price controls, etc., and many different kind of regulations and subsidies. So in that context, what is your strategy in India?
I think with this reset, so to speak, it would make the Indian healthcare market into a massive powerhouse and a platform for medical tourism to come into India and to tap on the huge talent pool of Indian medical doctors, surgeons, healthcare professionals, nurses, radiographers, allied healthcare support, as well as occupational and physiotherapists, and et cetera, et cetera. So generally, I think the increased regulation, the increased focus on the industry-wide would tend to produce longer-term benefits and results. And, as a corollary to that, if you look at where we are, we have never flipped any asset because we're not a fund or, we don't have to sort of, have a 3x returns, in a very short period of time because we are operators. All of us here, if you look at the senior management of our respective companies, all of us are managers. We're professional management. So whenever we go into a country or any asset that we merge with, we are in it for the long haul.
Right. So you accounted several reasons why you're upbeat on India, and while we still want to talk about the Fortis deal, can't help but ask, there are many other hospital transactions, assets on sale right now. There is Medanta, there is Seven Hills, and many of them. Are you also interested in others? You did make a comment very recently that you are focusing on brownfield expansion in India.
Yes. We looked at quite a number of the assets itself. Obviously, in terms of the geographies in India itself, where we already have our presence, we will not seek to overlap them because obviously we are also worried about the short-term impact of cannibalization. So when the opportunity for Fortis came up, we find that it's actually very complementary to our current footprint in India, where we are today we are largely concentrated in southeast of India itself. I think we have a hospital in Bombay and another one that's yet to be completed coming up in Bombay. So the Fortis footprint, we find is a very good complement to where we are.
You must have got enough time to speak to the shareholders because their vote is very important for this transaction to go through. 170 rupees per share is the floor price for the open offer. Are you open to negotiation at all? Have the shareholders also put in a request because there are certain banks who have converted the debt of the company into equity at a much higher rate than this?
Given the headwinds that's coming, we believe that this is actually quite a fair price. I think that given the fact that whatever we put up on the table itself is a premium to what the market price is being traded as today, I think we have offered a very holistic as well as a very simple solution to all shareholders, current existing shareholders in Fortis. I mean, for those who want to exit, we have given them the opportunity in an all-cash deal. And for those who believe in our story and who want to ride the upside with us, we would certainly welcome them to support us.
Are you going to put in more money once the deal is consummated? How much are you looking at for the ship to really stabilize quickly?
So our estimate is that the company needs probably something closer to 5,800 to 6,000 crores. Yeah. All right. Now, like I've said earlier on, we have also taken into consideration, because in a run-up to the offer, we have also taken into consideration the wishes and also the aspirations of many minority shareholders who said that they don't want to be diluted excessively at whatever offer price we put up, because they want and they believe that with us coming in, the price would be able to stabilize quite quickly. The other 1,800 crores, we believe that after the moment that we remove the effect of the leakage in terms of the rental paid to the RHT, the company's EBITDA will go back up, I think, in a steady state, probably some 500 crores a year. So that, and in terms of the restructuring of some of the deadlines, we would then be in a better position to leverage, up another 1,000 to 1,500 crores. And in the event that we can't do that, we always have the option to issue a rights issue.
Right, so that was MD and CEO of IHH Healthcare talking exclusively to CNBC TV18. And the Board of Directors of Life Insurance Corporation have approved the state-run insurer's plan to acquire up to 51% stake in IDBI Bank. Now, remember, last month, the insurance regulator had shown the green flag to the proposed deal. Sapna Das, who broke that story, joins us now with all the details. Sapna, we knew that the LIC board's nod was only a matter of time, but take us exactly through how LIC plans to hike stake in IDBI Bank now going forward.
So very clearly, the LIC board approval in terms of increasing its shareholding in IDBI Bank to 51% from the current 7 to 8% that approval from the bank, from the LIC board has come through. Of course, it has heavy government representation. The DA Secretary, Mr. Subhash Chandra Garg, the Additional Secretary Revenue, Mr. Girish Chandra Murmu. The government was heavily represented in this particular board meeting of LIC to take up this particular proposal. Having said that, what basically emerges is the fact that though the mechanism for this fund infusion or this kind of raising of money is not very clear, but the government is in favor of the preference share issuance by IDBI Bank in favor of LIC, so that the money goes directly to the bank, because there is a capital requirement as far as IDBI Bank is concerned, so that will take care of that. However, technically the second option of a disinvestment, technically that option is probably still open, but I've just stated what the government preference may be, simply because the money should go to the bank, so nothing will come to the government in that sense. Last but not the least, there could be the requirement of an open offer also. The SEBI's takeover code has to be kept in mind by LIC, though of course it's not expected to have a very material impact, as the public float in IDBI Bank is quite limited. A government nod will definitely be required to the entire proposal. We now have to wait and watch and see. IDBI Bank AGM is happening on Tuesday. If this proposal is also taken up, a bit of a question mark on that. Technically, it's not on the bank board agenda as of now.